All right, let's dive in. Today, we're cracking open the playbook of a true master investor, Bill Ackman. We're going to see exactly what he's buying, what he's selling, and maybe more importantly, uncover the single big strategy that ties it all together.
I mean, have you ever really thought about it? Not what they say in interviews or on TV, but the actual behind-the-scenes moves they are making with their own capital. Well, today, we are pulling back that curtain on the confidential portfolio of none other than Bill Ackman.
So before we get to the exciting new bets, we have to understand the foundation. See, every great investor has a core set of companies they believe in for the long, long haul. This is Ackman's fortress.
Okay, so this is the bedrock. And I want you to notice the theme here, right? These are not flashy, speculative bets. These are dominant, almost irreplaceable brands in their industries. We're talking Google, Hilton, Chipotle. These are the absolute cornerstones of his empire, built to last. It's honestly a simple but incredibly powerful idea. He is buying the best-in-class, the category-defining companies that are just deeply woven into the fabric of the economy. So, with that fortress firmly in place, now we get to see where he's putting fresh capital to work right now. And trust me, this is where the story gets really, really interesting. Think about it. In a market just full of uncertainty, with everyone talking about tariffs and economic slowdowns, Ackman is making a huge, decisive move, and he's targeting one of the biggest sectors in the entire world. That's right. He used all that recent market chaos as a golden opportunity to start a brand new major position in Amazon. You know, when other people were getting fearful about the economy, he saw a chance to buy one of the world's greatest companies on sale. And this quote, this gets right to the heart of his thinking. This is not some short-term trade. He believes Amazon has two absolutely killer franchises that can compound his investors' money for decades to come. So let's just break down the logic here. He's getting two dominant businesses, cloud computing with AWS and, of course, e-commerce, for the price of one. He looks at the AI boom and sees pure rocket fuel for AWS. And he used all that recent fear about tariffs, which, by the way, he thinks won't really hurt Amazon, to get in at a fantastic price. But here's a little secret that all the great investors know. What you sell is often just as revealing as what you buy. It tells you what risks you're desperately trying to avoid. And Ackman made one very, very clear move here. He completely exited his position in Canadian Pacific. Now, to be clear, this is a fantastic, high-quality railroad business. So the move wasn't about the company itself. No, it was about something much bigger.
I mean, that's the key question, isn't it? Why would you sell a great company? What does he see coming over the horizon that maybe we don't?
Well, it really just comes down to risk. He looks at a railroad and sees a business that's more exposed to big economic shocks and potential tariffs. So he sold a great business to double down on what he believes are even more resilient ones, like Amazon. It's a strategic chess move to make his entire portfolio more durable.
So, we've seen the core companies, we've seen the big new buy and the strategic sell. But there is one investment in his portfolio that unlocks the entire master plan. It reveals not just where he is today, but where he's going for the next 20 years.
The key, the absolute key to understanding Ackman's future strategy is Howard Hughes Holdings. Now, it's been a long-term holding for him, but recent moves show he's planning to transform it from just a real estate company into something much, much bigger. And I am not exaggerating here. The explicit goal is to turn Howard Hughes Holdings into a diversified holding company modeled directly on Warren Buffett's legendary Berkshire Hathaway. It is one of the most ambitious plans on Wall Street today, bar none. And the plan is remarkably clear. First, his funds just pumped $900 million of fresh capital into the company. They're going to use that money to acquire a high-quality insurance business. Why? Because insurance generates what's called float, a constant stream of cash from premiums that can then be invested. That cash flow becomes the engine to go out and buy a whole portfolio of other great businesses, all under the Howard Hughes umbrella. You see, this isn't a departure from his strategy. It's the ultimate expression of it. He's literally building a permanent vehicle, a machine, to acquire companies that fit this exact checklist. Businesses with huge competitive moats, predictable cash flow, and great management. This is the blueprint for everything he's going to buy from now on. Okay, we've covered the core holdings, the big buy, the strategic sell, and the Grandmaster plan. So what does this all mean?
Let's distill it all down into the one critical thing you need to remember.
This is the bottom line. Every single move, from buying Amazon to selling the railroad to transforming Howard Hughes, it's all about one thing: concentrating his capital into an elite group of durable, resilient, cash-gushing businesses that can compound value for a very, very long time, no matter what the economy or politicians do.
With the Howard Hughes transformation just getting started, he now has a vehicle to acquire whole new businesses. This isn't just about picking stocks anymore. This is about building an empire. And that leaves us with the most exciting question of all.
Hey, if you enjoyed this analysis and got some value out of it, do me a huge favor and hit that like button. And make sure you subscribe so you don't miss the next portfolio we deconstruct. Thanks so much for watching.